Hello, it's Robert Miner with Dynamic Traders Group with this week's DT Trade Strategies for the week beginning June 29th. That's this coming Monday, where we take a look at a couple of markets, kind of abbreviated fashion compared to what we do with our DT reports, where we alert you to a couple potential trade setups that are coming up for the next week. And that's what we're going to take a look at today. If you like what you hear today, what you learn today, whether you trade the market we talk about or not, you can use what you learn in any market in any time frame. And if you like it, check out our DT reports where we have a trial available for just $19 for an entire month. So we make these videos each week for our Twitter and YouTube followers to give them a taste of what we do, and also to get you alert to a couple potential trade setups. So I want to emphasize every week is learn to trade, don't be a forecaster. A lot of people get that confused, and they think that I'm forecasting in these videos or in my reports. I'm not forecasting. I'm identifying conditions with a high probability outcome to set up for a specific trade strategy. So you need to decide if you want to be a forecaster or if you want to learn to trade. For instance, I talk a lot about Elliott wave in these videos. You need to decide, do you want to be an Elliott wave academic? Or do you want to actually learn to use Elliott wave for specific trading decisions? And there's a big difference between the two of those. So if you want to make a business of trading, your objective is not to accurately forecast the future, but to identify opportunities, take advantage of those opportunities. They may unfold for, let's say, a longer-term trade, or it may be a short-term trade. Either way, you're going to identify an opportunity with minimum capital exposure. And we want you to take advantage of that. And of course, everything I do comes from the real world of trading. This is the one-year global derivatives trading championship that Robbins Trading Company had, their World Cup championships. And through the end of May, which was the end of the one-year contest, I was up 134.4%. Pretty good for a year. So again, what I'm teaching you is the reality of trading. Here's Forex Contest for 2020 through June 25th, just a couple of days ago. So up 59.6%. Trading Forex, which is, for me, I just trade the euro, and I'm pretty good at trading the euro. I really like the euro because it has good trade setups. Sometimes it works out to be longer-term trends, sometimes short-term trends, but good trade setups with minimal capital exposure. And in fact, last week I alerted you in these videos to a good setup in the euro. We'll take a quick look at that, again, a little review of that. So again, trade, don't forecast. Learn to identify trade setups with acceptable capital exposure. Let's take a look at a couple of markets. Well, this is the Euro daily data, and this is actually a market that last week's video alerted you to a potential trade setup that worked out, not as along a trend as I anticipated, but I got the cursor right here on last Friday, and you can take a look at that video from last week. But as I mentioned, the video is in an ideal position to complete an ABC wave 4 correction. And so the daily momentums were dual look back oversold. It was in time zone, price zone, everything to complete a wave 4 correction. So we wanted to focus on identifying trade strategies to go long. Well, I went long myself early in the day, the next trading day, which would be on Monday morning, which ended up being real nice. Monday was a big up day, Tuesday a big up day. Everything's looking great. So is this a wave 4 or not? It still has a question mark on it. It's probably not. But it afforded us an ideal setup for a long position with very minimal capital exposure. And as I mentioned to our subscribers, is that even if it didn't end up being a wave 4 low and continue to a new high to complete this 5-wave impulse trend up to a new high above June high, at the least it ought to be was a 3 to 4 day net bull trend. Well, it actually only ended up being a 2-day, but because of trade strategies, captured a fair amount of that gain. Not nearly as much as anticipated if it was a wave 4, but again, we're not forecasting. We're looking for trade setups with the minimal capital exposure. So certainly by Wednesday, when this is what's called an inside bear reversal day, it was indicating that it was not going to continue, so we brought the stops pretty close to the market. I brought my stop above the prior day's low. So yeah, gave back a lot of what we call an unrealized gain, but took a little profit out of it. Not too bad. So we're trading. We're not forecasting. Okay, so if you want to be a forecaster, you're listening to the wrong material here. But have we given up on this being a wave four? Probably. Number one, it never confirmed the low by closing above the wave B, what I got labeled a wave B anyway, closing high or trading above the high. So it got right up to there and then turned right back around, made a bear reversal in the daily momentums and the weekly momentums, dual look back bearish. So more than likely, we've completed a weekly high and we're not going to make that new high as anticipated. So right now there's not a real ideal setup, a low risk, low capital exposure setup for the euro, not at least in the next 2 to 3 days that I see. So we're not going to focus on that. I'm going to look at one more market we looked at last week to see what a great setup that turned out to be. And then we'll look at a couple new ones for a couple other setups for this coming week. The other market we looked at last week was crude. We looked at it briefly, and that it was at or near a position to complete what we call a weekly high. That's a high that's going to last several weeks. As I mentioned last week, whether crude made a new high or not early in the week, the next, what we call the DT oscillator, whatever momentum indicator you use, the next daily momentum bear reversal would probably complete a weekly high. We'll go back to the weekly data here. And again, this last bar was last week. And the week before that, our DT oscillator, the momentum indicator that I use, we use in our reports, had already made a bear reversal. So now we're waiting for the next daily momentum to make a bear reversal. And that's a dual time frame, daily, weekly momentum bearish setup. In this case, to complete a weekly high. Well, on Tuesday, we made a slight new high, tagged a 50% retracement, but closed lower for what we call a key reversal day, and the daily momentums had reached overbought, and of course the next day made the bear reversal. So more than likely we've completed, and I'll go back to the weekly, this weekly high. We also had a key reversal week as well with a lower close. So we've probably completed a weekly high. Just be aware of that. So that's a setup with minimal capital exposure for the short side. And of course, if you're long, at least if you don't want to sit through a 3 to 4 week corrective decline, you either want to exit or get your stops really close to the market on anything that's long. But whether you're trading crude oil or options, our ETFs, there's crude ETFs, you can go long or short on, is that we're probably just in the initial stages. So it's not too late. Take advantage of this, and please do. W.D. Gann said that the safest time to enter a trade is on the first reaction against the new trend. So what you might want to do, you can either go short right away, because let me go to that 240-minute data. At the end of the day, Thursday, early Friday morning, came right up to the 50% retracement. We're not far off of that now. So this is a setup right away to consider a short trade for a continuation of the bear trend. Or here's what the Gann type of trade is: wait for the next cycle in the daily momentum. So we haven't quite bottomed this yet. Only the fast line of the 8 is oversold. Usually means we got another day or two sideways to down before we make a daily low. And then it'll be 3 to 4 days or so. We make a bullish correction here. It should just be a correction. And then when we make the next bearish reversal, that should complete the initial correction against this new weekly trend. That'll be an ideal time to enter on the short side if you're not already short, or if you're, too hesitant to do it right now. And always remember, you just adjust your position size or your leverage if the stop's a little further away from the market. So just do less leverage, smaller position size. That's what I tend to want to do, because I want to get in a market right away when it makes that reversal. But if I miss the setup, I'm always willing to wait for the next cycle and bearish reversal in the daily momentum. And that is typically what in Elliott wave terms we'd call a wave 2 or wave B correction that we look to identify to get into the market. So the general outlook here and the technical position for crude is that we've completed a weekly high. We should be sideways to down for at least 3 to 4 weeks, making a corrective wave 2 or B over the next few weeks. So that's what we're looking at for crude. Great setups because we're just at the very beginning of, or we're probably just at the very beginning following that weekly high and the weekly bear trend. Well, now let's take a quick look at the S&P. Boy, my favorite market to trade. I do pretty well on that. Here's the daily data. I'm looking at the cash index, the SPX. Same position as for the ES and substantially same position for the other indexes as well as far as trend direction and reversals, etc. But here we are on more than likely we've completed the initial swing down. We can call it a wave 1 or A, and then we had a little A, B, C, wave 2 or B correction, and now we're continuing down for what we call the wave C or the wave 3. And more than likely, that will exceed the first section down, the June 15th low, before it's complete. Daily momentum's bearish, probably have another 2 to 3 days sideways to down, and it could go as long as into the next week, not this coming week, but the week after that. But the maximum time-wise on downside should be July 9th, and that's quite a ways away. Trading time anyway, but if you're a subscriber to our trade alerts, you've already had the short signal back here about a week or so, and we're still short, and we haven't brought the stop very close to the market. I usually don't bring the stop close to the market, very close until at least the daily momentums have reached oversold, because that's warning us that we're near a daily low. So then I'd bring the stop close to the market on half the position, keep it very wide on the other half. We always do multiple unit trading, always. That's the key to long-term success trading, no matter whether you're trading stocks or futures or whatever, is that you do multiple unit trading, you exit one relatively quickly, and you keep your stop wide for the other one. So where are we at with the stock index is probably sideways to down for 2 or 3 more days, and will probably exceed the June 15th low. So again, all of this it's not a forecast, it's a technical position with a high probability outcome. Because of the pattern position, because of the timing, and the earliest timing for a weekly low is next week, not this past week, so again, should be lower next week. The pattern position suggests we'll exceed the June 15th low next week, and the momentum cycle indicates that we've got another 2 to 3 days sideways to down. So the technical position indicates a continued decline. Short-term traders want to be oriented towards the short side, but then we'll be aware of, let's say around Tuesday, Wednesday of next week, if the market does continue down, we're probably getting pretty close to at least a daily low. Could be a temporary low. And here's just a number to be aware of if you happen to be short. If the SPX reaches around 2888, and if your momentum cycle is oversold in a position from where it makes daily lows, that would be pretty much an ideal spot to complete at least a temporary low at 2888. That's the 100% alternate price projection of what I get labeled a wave 1 or A. So we can take a quick look at the ES, and there we are at the ES. Looks basically the same, and where it struggled here, we just had that one sharp reaction followed by 1 day up and then no follow through. Been sideways for 5 days. That's actually pretty sharp warning that there's really no buying power in the market, and that eventually it's probably going to roll over. Well, that's exactly what it did. And so again, about 28.59 on the ES. That's the 100% alternate price projection. If the ES continues to decline, and if it reaches around here, just be aware that that's a spot where we might get at least some temporary support. Well, that's it for today. Hopefully you have a fantastic weekend, fantastic next week. If you like what you heard and learned today, check out our DT reports. Take care.